Hi guys, Demi here. It's a beautiful Sunday here in Lagos, and I wanted to just take a moment to share a few of my thoughts with you. This week, I have been thinking quite deeply about what tomorrow really holds for many of us in business. As a country, we stand at a crossroads, and the path that we choose will determine the future of our economy and the value of our Naira tomorrow. We face many challenges, as do most countries, but what are the solutions? Let's talk about it. Many of you who watch my content know that I am all about manufacturing on the continent. It's what I do. It's what I breathe. It is my life's work. Empowering our manufacturing sector is the solution that many of our challenges are calling for. In my most humblest of opinions, it is the only solution that will trickle down to other sectors and provide the support that they need. Now, let's begin by understanding the current landscape. Nigeria's manufacturing sector, with roughly about 2,000 active companies, holds an immense potential. However, less than 10% of these companies are currently export-orientated. Now, imagine the possibilities if we could double that number overnight. Nigeria's manufacturing sector contributes roughly about 9% to the GDP, while China's, I believe, is around 27%. Now, given our desperate need for economic diversification, employment generation, skill development, and export revenue, an ideal target for Nigeria's manufacturing sector contribution should lean more towards 15 to 20%. By targeting and empowering just an additional 200 indigenous manufacturing companies to become export-orientated, we could inject an additional $200 million into our economy annually. With the economic multiplier effect, this could result in an impactful $100 billion each year. I was recently invited to speak at the Lagos Leather Fair. The talent in the room, guys, was electrifying. It was incredible. And the pursuit of excellence I see demonstrated by those exhibiting was relentless. As a leather restorer myself, I spoke with a young man about the cost of producing his leather shoes. He shared with me that for a leather shoe priced about 120,000 Naira, he spent roughly about 60,000 Naira on raw materials. His cost of labor was erratic, relying on manual work that machines could do in a fraction of the time. This makes his production costly, and it forces him to look outside of Nigeria for sales to make up for the low buying power of the local market. But how can he solve this problem? Well, he needs access to finance to buy machinery, to bring down the time and the cost of his production, then utilize those savings for marketing and sales to a market with buying power that then he can now use that to scale his business. The cost of those machines for him was $6,000. Where on earth is he going to find those funds? So how do we achieve this? How does someone like him achieve this? Now, one solution is to create an intervention fund with a maximum of 10% interest rate, specifically for export-orientated manufacturers. This idea has been suggested by many before, but the question is, what are we doing about it? We desperately need a fund that only provides the necessary financial support, but makes it accessible to those who need it. We could mandate that these companies who receive these funds focus on exporting 50 to 80% of their products outside of the country. What's the result? An increase in foreign exchange reserves, immense job creation, and a stronger, more stable Naira. Consider the success stories of countries like Vietnam and Bangladesh. Over the past 2 decades, Vietnam has implemented policies to boost manufacturing exports, leading to a significant economic growth and currency stabilization. Similarly, Bangladesh focused on textiles. It has transformed its economy in just 10 to 15 years. These examples show that with the right policies and financial support, substantial economic improvements are achievable in a very short amount of time. In Nigeria, the impact could be seen in as little as 1 to 3 years. In 1 to 3 years, we could see initial improvements in import figures or export figures and slight stabilization of the Naira. In 3 to 5 years, we can see more substantial economic improvements, including job creation and increasing foreign exchange reserves. But then in long term, which is 5 years beyond, the manufacturing sector could become a robust driver of economic growth, leading to a stronger and more stable currency. However, the reality is this: people are more interested in immediate financial gain rather than specializing and contributing to high standard production because they are forced into survival mode. Additionally, the average interest rate from banks is prohibitively high. Between 30 to 35% makes it nearly impossible for manufacturers to access affordable financing. We wouldn't need to defend the Naira if it was put to work effectively. We need a concerted amount of effort from the government to stimulate the economy by providing concessionary funding for the manufacturing sector with haste. We, the manufacturers, are the solutions that we're looking for. We also need to rethink about our collateral system. In many developed countries, credit facilities and certification histories are used to guarantee loans, rather than relying solely on cash or real estate. How many manufacturers have cash or real estate? We are so heavily vested in our production lines and infrastructure to be able to afford it. Implementing a global collateral system in Nigeria would open up new avenues for manufacturers to access the necessary funding to scale their operations and compete globally. Now, let me share a little story with you guys. Back in 2017, after a rigorous application process, we were approved for a loan from the Bank of Industry, BOI. The very last hurdle of that process was BOI requesting from our bank to provide us with a bank guarantee. Our bank, who initially stood in place for us, requested that we, the manufacturer, provided them with 150% collateral in the form of either a property in ENQUIRIES or cash to issue this letter. How does a young woman or man in manufacturing get a property in ENQUIRIES as collateral? This is not realistic, nor was it inclusive. Needless to say, we walked away from that particular offer. Had we gotten that loan back then, we would have been better positioned for export at scale today, bringing in millions of dollars into the ecosystem. If every manufacturer in Nigeria could provide 150% of what they seek in loans as cash or property, there wouldn't be going to be BOI or their banks. Instead, you will find them in their factories. You will find them at the ports delivering their containers. You will find them in boardrooms negotiating with foreign clients. You will find them in conferences with stakeholders. You will find them in exhibitions positioning their products. They would be busy making and bringing in the dollars that our economy needs, and they'll be busy creating jobs and competing in global markets. They will not be seeking funding. Guys, there are hundreds of manufacturing businesses here in Nigeria facing this reality every single day. Some might say that Nigeria's problems are too complicated, but as our people also say, what you are looking for in Sokoto is in your Shokoto, meaning the solutions to Nigeria's problems are right here, staring us in the face. Perhaps it's us that is complicating it because we are looking in the wrong places for the solutions. Beyond BOI loans, how can commercial banks lend at commercially viable rates when the NPR is at 25%, resulting in final rates to customers between 30 to 35%? This situation does not reflect a government willing to invest in the growth of its economy because the finances to support such growth are not available. While we understand the economic realities, sometimes market interventions are necessary for specific goals. Even with the NPR at 25% and lending rates reaching 35%, the government can still create an investment framework for the manufacturing industry. This would involve making funds available at commercially viable rates. Such an approach would eventually stimulate the economy, yielding returns through increased taxation and foreign exports, therefore boosting the inflow of foreign exchange. It's a win-win situation. I'm not asking for concessionary funding for the sake of it. I'm advocating for the government to make a strategic investment into the manufacturing sector. This would not just involve direct funding, but also ensuring access to commercially viable rates. This investment would benefit the government by creating jobs, by increasing tax revenues and boosting foreign exports. The subsequent inflow of foreign exchange will strengthen the Naira and improve the overall quality of lives for the average Nigerian. This is what we refer to as synergistic approach. Government partnering with the manufacturing industry to generate a multiplier effect and achieve substantial economic results. Guys, empower manufacturers. Give them the tools, give them the support, and don't give up on them until they deliver results exponentially. If you believe in the potential of Nigeria's manufacturing sector as I do, and you're contributing to its transformation, even behind the scenes, I would love to hear from you. Join the conversation. I look forward to hearing from you guys. Bye.